All right. So good evening, everybody. Thank you again so much for joining us. So we'll get started here. So today we're going to be discussing financial strategies for today's real estate market. Very excited about this topic because the market has been so interesting lately. And navigating our way through and trying to determine what is the best step for you to take in this time. And we want to try to clarify some things and share some numbers, like really what's going on, not just headlines, but what's actually happening in the market. I'm going to go through. We'll make sure everybody gets a chance to introduce themselves. But again, just we're exploring financial strategies to help buyers, sellers, and investors to navigate the dynamic real estate market. Things are always changing. We're going to be looking at just some budgeting, financing options, like what are some of the new mortgage rule changes? What does that mean for you? How do we leverage some of the current market trends that are going on? And then I'm going to discuss a little bit about pre-construction. That's been a very interesting topic lately as well. So I look forward to kind of diving into that and helping folks navigate that part of the market. Definitely keep note. We're going to be sharing lots of great information. So grab a pen and paper. Please keep on mute for us. We want to try to get through all the information first, and then definitely as we're going, if there's something you're unsure of, then please you can go ahead and note that in the chat box for us, and then we'll try to adjust that as we go. We're going to try to keep the majority of the questions to the Q&A period at the end. So that's going to help us go through. So Max is going to be covering mostly some investment strategies and, like I said, just some really great insight into today's market. We have Jenny with us, and Jenny is going to be discussing some of the mortgage programs that are available. Definitely keep your questions for her that you might have about how to navigate interest rates and what changes are happening and some of these new mortgage rules. There's a lot of things in place that are here to help folks now make homeownership a little bit easier, how to balance your portfolio and stuff like that. So we look forward to hearing from her. And then myself, I'm Stephanie, and I'll be discussing some pre-construction strategies for today's market, some of the stuff that we focused on and used to help guide us before has shifted a little bit, and I want to answer your questions and help you guys plan to move forward there. So again, I'm Stephanie. I win awards, top ranked realtor in some of the brokerages I've been at. So award-winning realtor, currently we're with Anchor New Homes, and co-founder with Max here of Stuart Little Realty Group. Platinum Access pre-construction agent. I've been doing pre-construction since I started real estate 9 years ago, so I'm well versed in that. And then I also have Wealthy Home Sellers, a book that I wrote to help because I do pre-construction and listings. And so I'm here to help. We are here to help you guys be successful. And I just share some strategies on how to get top dollar for your home when you're sharing. So that's what I wrote about. And Max.
Yeah, I'm the other half of the award-winning realtor team at the different brokers that we've been together now, and I've been licensed for going on 15 years in the industry, different parts of the industry, not just pre-construction, but rent-to-owns, investments, student housing. So we have together a wide range of knowledge that we can bring to the table and help. Yeah. That's pretty much about me.
Oh, good. Okay. All right. And Jenny, if you could unmute yourself and introduce yourself so everybody can get to see you.
Hi. Oh, sorry. Hi, guys. My name is Jenny Tate. I am a mortgage agent. I've been in the financial industry for, oh my God, like more than a decade. I work directly for the banks, and at some point I transitioned into the employed, and basically right now I work with multiple banks. So it's Scotia, BMO, TD, and then we have other monoline lenders that we have access to. And that's all to say that we can create tailored approaches, find tailored products for your specific needs. So yeah, I'm looking forward to introduce a few exciting new programs and the reforms that we just had in the mortgage to qualify our buyers for maybe a little bit more money, get them into upgrade their homes, and we will work through it in a few slides.
Excellent. Thank you so much, Jenny. Thank you for taking the time to be with us. We really appreciate you and your expertise and your support. And yeah, a special thanks to everybody who's on the call. So we look forward to sharing with you guys today. And I will pass it on to Max.
So I can see that.
Sure.
Yes. All right. How's the market? What's going on in this interesting market with all the news we hear going on? So we primarily are working in the GTA area. Average home prices in the Greater Toronto area, which includes Hamilton now, has seen prices stabilize or slightly decline compared to, let me just move screen, compared to the heights of the previous couple of years. This shift is creating more opportunities for buyers to navigate favorable deals, and we'll talk a bit about that in the next coming slides. And, we saw some really high interest rate hikes up until around 2024. So what we have right now is distressed sellers. An increase in distressed sellers is evident from what we're seeing. A lot of people aren't they're refinancing their properties. They're having some, problems refinancing. Things aren't coming the way they want to. And there's way more distressed sellers that are, having problems in the market right now. So they're seeking to offload the properties. New construction delays because of the high interest rates from before. Properties are delayed, and people aren't getting their what do they call them now? Assessments. Appraisals aren't coming in the way they were before. They're coming in undervalued. So a lot of sellers are looking to offload their properties that way too. Okay, and if we look at some of the charts we have here, attached home benchmark prices in the area, what we see over the year here, I'm so sorry guys, I have a problem moving the charts back and forth. From January to December, prices in, let's say, Mississauga from January went up a bit and then came back down. What they're traveling with is the interest rates is what I'm seeing. So prices went up a bit and they came back down. And then as the interest rates are dropping now, you're starting to see a slight uptick in prices again through most of the areas there, whether it be Toronto, Oakville, Vaughan, or Markham. So we're in January, February going into right now. So we're going to see what the trend looks like as we're going forward into the next market. And at a quick glance, if you look at the detached home sales to new listings from last year in December to this year, the average price kind of stayed the same. The amount of listings were down and they're up now this year. And the amount of sales have dropped off because the interest rates were just so high. So if you see the semi-detached, if you look at the sales now, they've dropped off a lot. When you see sales drop off like that, what does that signal to me or to us? Opportunity. So we're going to figure out where we are in the sales market and what we can do with that. What we hear from the president, they're saying that high interest rates presented significant affordability hurdles and keep home sales well below the norm. I'm sorry, this needs to move for me. The housing market did benefit from substantial Bank of Canada rate cuts in the second half of the year, including two large back-to-back reductions, the 0.5 reductions that we saw. All else being equal, further rate cuts in 2025 and home prices remaining below their historic peaks should result in improved market conditions over the next 12 months. That sounds like good news to me. Jenny can tell us a little bit more coming up to what she sees. We have a rate announcement coming up, I think, on January 28th, and hopefully that's another at least 0.25 to zero point 0.5 again, and that should really help out the market as well. So why early 2025 is ideal for buyers, why timing matters in the real estate market. Inventory is higher than average, leading to more options for buyers. So there's more houses on the market than that are moving right now. Sellers are distressed. They're on for a lot longer. Sellers were more motivated during the first quarter due to seasonal factors. The seasonal factors are the spring market's coming up, and right now everything is down, so they can't wait to offload their property. Mortgage rates are steady as it is right now, with a chance of another rate drop. Buying before the spring rush ensures better negotiating leverage, and we'll go into those details. If you look at this chart on why timing matters, 100 being the highest and 0 being the lowest. Seasonally, from January, where we are right now, February, March, it starts to pick up. That's where most of the activity starts to get high. And then when we get to April, May, June, it shoots up and slowly tapers off, going down from there. So from December to February is like the lowest parts right there. So if you're timing the market, depending on if you're a seller or you're a buyer, you figure out what you need to do to get ahead of the market to get the best bang for your buck. So what can you do? You can partner with a local expert who understands the GTA market and understands the trends and what's going on in the market as well. Get pre-approved for a mortgage to show your financial readiness. It's so important to get qualified for your mortgage because that helps you negotiate so much better. A lot of times you don't know that you can qualify for a lot more, or you're not fully sure yet, and you can miss out on so many opportunities not being fully qualified. Focus on the undervalued areas or properties or upcoming neighborhoods. If you're going into pre-construction, if you want to find a deal, and some people don't know that this area in the north is starting to boom and that's where you're going to get a good deal, then that's where you should be focusing. So being ahead of the trend and knowing where those markets are. Leverage off-market listings from your local realtors like us. We have a WhatsApp group with off-market properties, with our pre-construction properties. Sometimes distressed sellers come to us and they have to offload their properties, unfortunately, but we also help them by getting that done sooner than later. So if anybody is interested in being on one of those lists in the group, please message us directly and we can get you on that. And be ready to act quickly and to avoid overpaying at the same time. The only way you can act quickly is if you're fully qualified. Capitalizing on today's opportunities. Look for homes with extended days on market. Homes listed for a long time may have motivated sellers. So we look at the days on market. When you see homes that are on the market for like 100 and something days, almost a year, the seller's most likely motivated. They may have, if it's vacant, that's another reason why they would be motivated. And if they're just paying mortgage on top of mortgage payment and nobody's in there, they're going to be motivated. Sometimes they have a tenant, and we help them navigate getting that tenant out and getting somebody else in. So there could be many reasons why they're motivated to sell, and those are some of the ways that we look at that as well. Buy from sellers that are in financial trouble. Sometimes, again, it could be job loss, it could be debt, it could be somebody in their family, it could be school, any kind of change, and they could just be motivated as well. Sellers are often more open to negotiations when they're in those situations. Looking for price drops, foreclosures, anything like that that we can see on our MLS. That's what we try to do to help get favorable terms. 30-year amortization. Jenny can talk more about that and how you can qualify for that, because it helps you get lower monthly payments, and sometimes you can get more home for your dollar. You don't necessarily pay as much principal, but you do get into the property sooner, and then you can refinance and go from there. Sometimes it's just about getting into the property.
Okay, Jenny. So we'll turn it over to you.
All right. So actually, Max, whatever you said, your last sentence, it's exactly what you guys are seeing right now on this slide. And it's basically for our first-time home buyers, we can extend from 25 years to 30 years amortization. Basically, before everything was insured purchase, mortgage that was under a purchase price under $1 million, right now it's $1.5 million, we had to put 25 years amortization. So we all heard 25, 30, but how does it make difference? Like where basically our buyers can benefit from. So if you guys look on the left side, you can see basically the difference. By switching, let's say with the same exact monthly payment, if before we could qualify, like let's say a person could qualify for $550,000 mortgage, by extending it to 30 years, we actually added almost 15%. We brought the same family, the same person to $600,000 mortgage, right? So that 5 years, it's exactly though, like Max said, yes, you will be paying more interest, but because we extended, and it's because we extended it, right? But if you have extra cash, you get a raise in your in the salary, you can actually close that gap of those 5 years quickly. And lots of lenders actually offer those options. Now, if you switch to the other side, to the right side of the screen, you can see how the difference in between 25 and 30 years, actually what the difference it makes in your monthly payment. So let's say you don't need to qualify for more money, but you want your cash flow to be more manageable. So if you extend your amortization to 30 years, you're actually going to pay around $400 less per month for the same amount of money, right? So you have two options how that 30 years extension of amortization can impact you, or we qualifying you for more money, or we basically reducing your monthly payment. Okay, let's switch to the next one. All right, so the next two slides, it's basically specialized programs. And I just want to note, they're not for first-time homebuyers. Anyone can use this program. I think they are underused. I actually have right now a client that's closing on purchase plus improvement. And the next slide, I have another client, they're actually closing like in the same week. And that's why I felt like I need to present those two products because they really make the difference. So let's talk about the first one. The first one is basically, it's a purchase plus improvement. Let's say your realtors, Max and Stephanie, took you to show you properties, and there was a great condo, like nice condo, but it needs some love. It needs some love. It needs some, let's say, 100K for renovations, and you don't have that. Like, so let's say that condo that needs love, you can actually buy potentially for much less than you would buy the renovated property. So now you're like, okay, I like the house, but I hate the kitchen, the floors just don't work for me. But I have no money to renovate that. The lenders will actually give you up to 20% of the purchase price. And if you think about it, it's quite substantial amount of money, right? So if the condo is 600, they will give you up to $120,000 to make that home your own. And then they take that 100,000 and they dump it in your mortgage, and it's being amortized to 25 or 30 years. So the monthly payment will be increasing a little bit. You're not even going to feel it. So that's what I'm saying. And Stephanie and Max, like, usually it's always the better investment to buy a home that needs a little bit more love, right? Than buying that perfect home and that costs so much more. So, okay. So that's program number one. And if you flip to the second one, which is absolutely my favorite.
Sorry, one sec.
Yep. All right. This one is absolutely favorite, and it actually can basically bring you from condo to town, or from town to detached. So this is how it works. If you're buying a home with a basement unit, and it does not need to be a legal unit. I know we kind of like all conditioned to think only the legal basement will make the difference, but it does not have to be. It needs to be a separate basement unit, but it doesn't have to be legal. We are going to use 100% of the rental income as your income, 100%. And then we are going to deduct all the liabilities from your home, like your tax property that will significantly drop our pre-qualification and the utilities. As you can see, as you can see on the screen right now, my current client had a household income of $125,000. They went to the bank and they were qualified for 635. They're like, okay, Jenny, we're buying a condo. And I'm like, let's see what we can do. So I look at the documents. They were actually more than happy to look for that basement unit that will be covering literally half of their mortgage payment. And so, and then, so it's $1,500. It's not even that much. Like I qualify them for the bare minimum and they can actually maybe potentially get more. So we said, okay, 1,500. We reduced all the utilities, the taxes and everything, and we brought them from 630 to 950. Like that's basically moving from condo to town. So again, you don't need to be a first-time home buyer. You just need to know to which lender to go.
Yeah.
I don't know, Steph and Max, if you want to add something about this type of like homes with basement units.
Yeah, that's a great note. Thank you for that. Even from before when I was doing more flips, those are great programs, the purchase plus improvement, and then being able to use 100% of the basement, and it doesn't have to be a fully legal basement. Sometimes lenders don't always use the 100% of the offset that way. So when you do have great products like the ones that you're advertising here, those are great opportunities to get in. And it's the money doesn't come out of your pocket. Maybe you
Nope.
put something up front, they pay it back automatically, and you get more bang for your buck in that sense. So those are two great options. Yeah.
That's
Yeah,
it.
absolutely.
So that's it. Like that's as regards to the mortgages. I just wanted to present to you guys, like if you just a few of the different programs that we can place you at depends on your situation. My recommendation is don't be shy. Just don't be shy. Like you potentially don't know how much you can pre-qualify for, or you might think, oh, my income is X, I cannot get more than 600. But as you can see, we can creatively put your file together and upgrade you. Yeah, basically, do not be shy to ask for a
Yes.
pre-qualification.
And if you could give us a quick insight into what you're seeing or hearing in terms of the rate announcement on the 28th.
Yeah.
Everybody could ask questions after, but if you can give us a quick insight into that.
Yeah, I think it's honestly kind of like, the wavelengths, like you think, yes, it's going to be like this great drop of 0.5% again. And then you kind of like, no, maybe it's 0.25. But to be honest, like the inflation report just came in and we actually trading under 2 again. I believe it's around 1.8. And I think all the signs showing that we are definitely going towards another drop. The question is how big it is.
Yeah. So
And
my
Max,
insight is, go ahead.
and I just want to reiterate and say what you said about distressed sellers. I
Mhm.
see it every day on my side when my buyers are coming to pre-qualify for mortgages and buy homes. We are sometimes even having hard time, like sellers having hard time to release the units because they don't have enough time, because they took first mortgages, second mortgages. So they are
Mhm.
distressed. They are looking to offload those mortgage condos, and the
Mhm.
buyers are coming in and getting those great
Yeah,
prices.
Yeah.
for sure. We're definitely seeing that on both sides as
Mhm.
well. I almost forgot what I was going to say. I wanted to, as I just wanted to reiterate that with the rates coming down now, even if it stayed the same or it only went down to 2.25, because the rates dropped during the down season, you don't get to see what the market would have done if it was a part of the regular buying season. So at the lowest point of the market, that's when the rates dropped. So we really couldn't see what was going on. So if they stayed the same and it was spring, the rates aren't actually that bad as they are right now.
Yeah, they're not horrible. But to be honest, I'll tell you this thing. Last January, it was bad. Like there was no much transactions happening. this January been busy. I know
Mm,
maybe it's not being reflected in the stats, but
mhm,
in my everyday, comparing
mhm,
last Jan to this January, I can
mhm.
definitely see the impact of the rates being of the rates being
Yeah,
dropped.
yeah, for sure. It's because we're delayed too. Everything's about 2 to 3 months out. So we'll definitely start seeing those numbers change.
Exactly.
Yeah, surely. Thank you. I'm going to jump to the next one here. What do we have? Investment strategies. Thank you, Jenny. And yeah, definitely ask us some more questions after. Best property investment strategies. What do we have? So, investment strategies, understanding the market cycle. Um, be aware of the real estate market cycle and invest during the early stages of the market upswing, why it matters. Timing your investment can maximize your returns and minimize your risk. So, knowing where we are in the cycle, if we're looking in general at the 10-year average of the GTA, what we were looking at, a lot of the distressed sellers, they bought around here at the top right here. And as you know, the interest rate stayed high and we went through COVID and everything, it dropped so significantly to where we are right now. If we're looking at the 10-year average, you hear all kinds of stuff on the news about what's happening in America and what's happening there and whatever. If you add this 10-year plus the 10 years before that and the 10 years before that, it's actually been going up. And then the market corrects itself. And, we're here right now. To me, this says opportunity. Interest rates stay the same or they go down a little bit. The properties are going to start going back up again eventually and gradually. That's my thought. So understanding the market is very important, depending on where you are. So you may have, been right here and you have to offload. That just happens to be where you were in the market at that time. So understand where you are, whether you're buying at this moment or you're selling at this moment. Diversify your portfolio. There's two rules of thought in terms of diversification. Some people don't like to diversify because they do the numbers, and whenever they buy, they buy understanding where they are in the market, and they will only buy right here or they will only sell right here, and they only do pre-construction and they only do student rentals, and they only that's their strategy. If you diversify and maybe you have a couple of student rentals and you've done some assignment or you have some condos, but you bought at the wrong time and you need to get rid of some, well, because your other portfolio, your other properties are still doing good, you bought at the right time, then it offsets what happened with maybe some of the underperforming properties, and it doesn't matter as much. So I think it's a good idea to diversify. We diversify personally and recommend that. More importantly than diversifying is knowing your numbers and when to get into the market and when to get out, and when your exit strategy is. Today versus tomorrow considerations. Conditions on financing. So conditions, when you buy a property and you have certain conditions, today we can do things like, financing, home inspection, for sale of buyer's property, SBP. We did that with a client, and that's because it's a buyer's market. In a buyer's market, you have way more negotiating power and you can put those conditions in. I'm sure Jenny can attest that when it's not a buyer's market, it's a seller's market, she hates it when people go in without financing because it makes
I
her
hate
work.
it. I
Go ahead.
absolutely enjoy
Go
it
ahead.
right now.
Yeah. Yes.
Yeah.
Yeah. Yeah, and, people have to come up with money. You make a deal at this price, and you don't fully qualify for that. You have to come up with that money out of pocket when it's a seller's market. So knowing whether you're negotiating today or tomorrow, these type of things are important. How many buyers are on the sidelines when a market like today? If you don't take an offer, you may not get an offer again because
Mhm.
that buyer is going to go get something else. In a multiple offer situation, there are a bunch of buyers on the sidelines. People literally throw money at properties. So knowing where you are in the market is important. Home prices increase with increased demand. Right now, there's not that much demand. It's slowly starting to go up, but there's not that much demand right now. Days on market, which I mentioned before, is how long has it been on? The longer it's been on, the less desirable it is. The shorter it's been on, the more desirable it is, and the faster the homes are going. High inventory goes hand in hand with days on market. When there's a high inventory, um, When there's a high inventory, it's on for a long time. There's lots of days on market. And then when it's low inventory, that's when homes are selling in like 5 days. You see it go up, it comes right back down. If people put it up, they do an open house. After the open house, accept all offers. That's what they do in that market. So where are we at? Investment strategies, again, long-term versus short-term. You want to do this one? No? Okay, I'll do this one. This one is about what's your strategy, say, if you're getting pre-construction? Are you going to keep it on completion? Are you going to rent it out? Are you going to assign it? What's your plan when you do that one? You can do different ones. What's your exit strategy? We always try to have at least a plan A and a plan B, because depending on where you buy in the market, depends on what you can do with the property. So you might have bought at a certain, height in the market. Can you keep it and rent it? That might be your plan B if you didn't get to assign it because you bought it during a different time. Stay informed about the legal aspects of the condo corporation. If you're buying a new condo, are you allowed to do Airbnb? Are you allowed to do short-term rentals? What are the condo rules? What are the different type of ownership types? Are you allowed to own a business inside the condo? Are you allowed to have pets? What size of pets? Those are very important. And work with an experienced team, a real estate lawyer who knows their stuff, an accountant that can help you with buying on pre-construction. Are you going to incur capital gains and different things like that? Work with an appraiser that helps us out as mortgage agents and realtors so that we can, get the property appraised properly so that there's money in the property so that we can close in financing, whether you bought new construction or you're trying to refinance or whatever else. Sometimes appraisers, don't know what they're talking about. The market shifted or they're not familiar with that type of property, and they don't always like to listen to realtors or mortgage agents. So if you can get a second opinion and you have a good relationship with your team, that's important. That includes your realtor and your mortgage agent like Jenny. Yeah. Did you want to say something, Jenny, about that? No? Okay. Okay. So appraiser can be your friend or your worst enemy. We'll leave that there. And what's going on in pre-construction?
So pre-construction investment strategies, just some tips before we jump ahead. So researching the builder, I think this is really important for current market. Well, it's always important, but it's especially important now. Just to understand the developer's track record. How many projects do they have going on? What's their track record like for in terms of completion? There are some builders who can fully finance their own projects. There are builders who can state they've never spent a day in occupancy, never had delays. So these are the things you just want to kind of understand the builder that you're working with. You want to make sure that you get the Terry on warranty and whatnot to protect your deposit. These are all things you want to check into. Location analysis, very important when I show you guys a couple of pre-construction projects later. Just understanding the community that you are buying. So what is going on? What are the factors that are going to help to increase or affect your future equity? Are we close to subways? What's the transportation like? How many highways? How many minutes to the highway? Are there more projects and developments happening? Like, are you buying into a phase one where over time the area is just building up? Are there schools and businesses in the area if you're thinking about renting? So these are all the things you want to break down and make sure that they align with your particular goals. There are definitely advantages in pre-con, and at this time, taking advantage of some of those early bird incentives are great. Yeah, usually phase one comes out with some really great opportunities from the builder. Right now, we're seeing things like cash back on closing. One of the projects I'll show you has 80,000 cash back on closing.
Interest.
Interest on your deposits, might be free upgrades, free appliances, reduced closing costs. So, again, work with a realtor who understands the market in these projects and can kind of help to guide you a little bit. The incentives will significantly reduce your initial investments and then have the potential to help you to increase your overall return. So we'll talk about some more tips for pre-construction in our market today. So pre-construction projects typically close between 1 and 3 years Again, every project's a little bit different, but it's the flexibility in pre-construction that that we are typically using kind of like as the advantage. Deposits could be structured in such a way that it's like a gradual deposit. So it might be spread out over a couple of years or a few months. You may not have all the money up front, but this allows you to have time to save and put the money down. And it's sort of like a forced savings because you're putting the money into the property, and that is going to be equity that's accessible to you when you sell or refinance or whatnot, right? There's money in your property. There are no payments or financial obligations while you're waiting. So if you bought in a phase one and you have a few years before it closes, then you just have time. Like time is on your side while the property is being built. If you're an investor and you're looking for like long-term gains, if a project is delayed, usually we're happy about it. It's okay, right? So anybody who had maybe a project delayed recently have had the benefit of avoiding some of that high interest rate environment, right? Or avoiding the little dip in the market, and hopefully as closing comes, then you start to see the market turn around. So time can really be on your side. And we're buying, of course, with the belief that future prices will rise, as Max was discussing about the market cycles, and that's kind of what we're looking for. Any building issues are under warranty for up to 7 years, so depending on the different aspects of your carry-on warranty. This can be great for folks who maybe aren't so interested in flip, aren't so handy, don't want to have to buy a house to do a lot of repairs and whatnot. This could be something that's advantage to you. It's a newer product, so on the resale market, it might be a little bit easier to rent, a little bit more easy to market, and kind of stands out from the rest. As an end user, what we definitely recommend today, as we've discussed quite a bit about like the appraisals and stuff. So if you're wanting to buy a new home, you can, and there's great incentives right now to do so. And you look for something that has a quicker close, maybe something that closes within the next 2, 3 months or 6 months or whatever your time frame kind of looks like. And you can take advantage of the lower price, the incentives, and get into a new. So that's definitely something. If you're an investor, taking into account the market cycles and where things are, you're able to buy now at a lower price with lots of incentives, and you have a longer close to help to expect more beneficial returns as the market turns around. The timeline, again, provides flexibility to loss of job, move, change of situation. Again, as I mentioned, long-term investor delays are usually fine. But if there is a loss of job, then maybe you look at, as you see here, like assignments. So an opportunity to add a name to the mortgage to make sure that you can close, or you're going to transfer it over to somebody else, or maybe you've move, or maybe you need more time to improve your credit or save up some more money for closing. And so you just want to assess the timeline and make sure that you're using it to your advantage. So assignments is somewhat like an opportunity to flip the property. Traditionally, over the last few years, a lot of folks made a lot of money with assignments. Definitely use it as a way of making a profit. Didn't have to qualify necessarily for a mortgage per se. But in the current market right now, that is not the best strategy. If you're buying something that's closing longer term, might be something to consider. But what we really do recommend now is using it more like as a plan B, as I mentioned. If something changes and closing doesn't look like it's aligning, then adding somebody or passing the property on is an option. Equity. So again, long-term market cycles. We were certainly at a height of a market where annual returns were really high. Some financial experts and whatnot are expecting a little bit more of a balanced market over the next little while we navigate through, the current conditions. So annual returns of maybe 3 to 5% is what's expected. Of course, we'll see how things go, but that's sort of where it is in pre-con. And then the last point is looking at rental income and cash flow. So now that we're seeing an adjustment with interest rates, we're hopefully going to move back into a better position for cash flow as mortgage amounts are a little bit less. So that's great. Rental guarantees and rental assurances, where you can buy pre-construction and a builder will guarantee a particular amount of monthly rent to you, whether it's leased out or not, they'll still pay, which is pretty cool. So that's something that was some folks were having a challenge with the really high interest rate environment. But again, as things are shifting, looking ahead, a project's closing in 3 years, let's say, that's something to consider, or maybe something you won't get at this time, and then be able to rent it out when your closing comes, hopefully for even more as things shift. We want to consider, high demand rental areas, of course, calculate your cash flow potentials. So these are two great points to consider when investing in today's market. Due diligence, really big, couldn't stress this one enough. Understanding the difference between deposits and down payments. So as mentioned, there's some builders now that are, even as an incentive, offering interest on your deposits that you've put down, which is amazing. It's wonderful. The down payment amount is something that's going to be determined with your mortgage broker. So if a builder is providing an incentive for you where they only say 5% down, fabulous. You're able to get into that property or have ownership on the property for 5%. And then your mortgage broker qualifies you for um, let's say 10%, then you'll have to put down that additional 5% on closing. So you want to just keep that in mind, that difference of what the builder's asking for and then what your mortgage broker requires for you for closing. Builders do need 70% sales, 10% deposits to be able to get financing from the banks, or else there will be cancellations, delays if targets aren't hit. So that's something to be aware of. Maybe as you're choosing or watching a project to see how the sales are going. Definitely, if you're phase one, you want to buy in with a nice reputable builder who maybe, like I said, does internal financing for themselves, and that's not an issue. The 10-day cooling off period is for you. It's for you to go and do your due diligence. So you're going to have a lawyer review the contract with you. Negotiations, there may be things that we can help as realtors to step in and make sure there's a few things that can help to protect you for your closing. Sometimes we're able to negotiate price points, which is awesome. But as the buyer, you do have the right to cancel for any reason that you have at all within that 10-day period. So you just really want to use that to make sure you're good. And then doing your due diligence is following the instructions of your mortgage broker so that you're able to close when your closing comes, and then making sure that you have like a plan A and a plan B to help you to be successful. So I'm going to go over just a couple pre-construction projects. And Marissa, we see your question. We will address that for you. So this builder is Concord, and Max and I attended their broker launch recently for King's Landing in North York, and then Canada House, which is downtown Toronto. And this is an example. I wanted to show this as an example of some of the incentives that builders are offering. So one of them is the okay. King's Landing. So they're offering $80,000 in closing credits for you, and 5% deposit. So, yes. So talking about pre-construction in this particular project. So we've got, I wanted to share this as an example of some of the incentives that we're seeing in the market. Okay. So 80,000 in closing credit back, $80,000 basically like off the price, which is pretty good. 5% deposit is another incentive that's being offered. So, for example, we've got 5% deposit, like with your offer, and then they have a 5% at 120 days, and then 5% when they get to the closing. At Canada House, they are asking for just a 5% deposit overall. So 5% deposit homes is really great. It's 5% they're looking for of the purchase price. Okay, so great opportunity, depending how much cash you have on hand to get into something. Um, as an incentive at King's Landing, they also are offering free EV parking, which is worth $75,000. And they're one of the only buildings offering where if you purchase, like everybody's getting free EV parking. And that's a great value going forward for the future when you consider what it might be worth, right? So there's value all around. As you saw in the video, luxury finishes. I think they have Canada or Ontario's largest chandelier when you walk into their lobby. Buyers get like a luxury gift, a designer gift. So lots and lots of incentives. This is one great example. All right. Then location wise, so just speaking to some things to consider. So we've got two subway stations really close to the building here. You've got big box stores, more developments coming up. It's not too far from the highway. So something like this would be a great location, um, high-end neighborhood, and that's that. Okay, so this is another example. This is Cachet. Okay, so Cachet is Mount Hope by Cachet. Mount Hope is about 15 minutes from downtown Hamilton. So from the GO train station, from all, universities, colleges. Hamilton's very well known for nice dining and whatnot, and their healthcare in the area. So the video just showed a few clips of their model home, which truly is absolutely stunning. And their townhomes are starting at 600,000. The end unit, which is one of their more expensive units, is like 819,000. I had a recent buyer. We negotiated the price down, and I'll show you some of the incentives on the next page. But they're freehold townhomes, which is excellent, outstanding. So as mentioned, Mount Hope is here, so like 15 minutes from downtown Hamilton, not too far from highways and mall, shopping, basically all the amenities that you need. So they were offering $5,000 in decor. In the video, you saw some of the decor items. With the new home, you get to design your home, which is really cool. They're giving free air conditioning, full appliances like washer, dryer, dishwasher, everything. 1 year of free maintenance. So these are freehold properties, but there's a pottle fee. Pottle fees is a fee that goes to clearing garbage and snow removal and that sort of thing. They are waiving all developmental charges, so there's no unexpected extra charges on closing, and they're also capped their closing costs at $5,000. So a lot of incentives, a lot of savings. and they were great to work with and very negotiable. This is a great project. I've known about this project for years. There's more room for development in the area as well, so I really like this one. This is townhomes. And then this last one, loud. And we're going to show you some detached homes. Okay, so I love this builder. This is Empire. I'm kind of focusing on just showing you guys a couple of the detached homes for like 749,000 that they're starting at. There are also townhomes available there, and I think it's just a really great neighborhood. It's a very active neighborhood. In one of the clips there, they were showing, a wide number of sales, a lot of people moving to the area, lots more development. There's a lot more homes that are going to be able to continue to be built. So that really helps with equity and future value. So they have condo towns and freehold towns with backyards and grass and balcony and everything, starting at 574,000, and then the detached are starting at 749,000. So just showing you an example of one of the homes, 2,000 square foot. You can choose if you like siding or brick. You can choose. They have so many floor plans. This builder has a lot of floor plans. And you can kind of look for and think about how does your family use the space, what kind of layout and stuff works best for you, which is cool. Incentives wise, builders can change their incentives and promotions at any time. So I saw they said like 5 days left on their 15,000 of decor dollars. You can do quite a bit with 15,000 of decor dollars. They were offering price reduction. If you go with one of the homes that has a quick close, like something closing in, say, the next 60, 90 days, I was able to negotiate for my clients like a reduction in the price, which was cool. 2 years free maintenance on the townhomes that have the pottle fee and appliances. So if you are a buyer, we want to encourage you guys, of course, to reach out. And number one thing I really do think is getting that pre-approval, because that really helps us, what neighborhoods we can look in, what price point, what market segment, so condo, townhome, detached home, we're able to look at. We are available for consultations. You can reach out to Jenny, Max, myself, just so we can help you. Like again, I always stress this. We are a resource to you. We want to talk to you. We want to help to see what your vision is and how we can help you get there. So we have a lot of experience and a lot of years combined in different aspects of real estate. So utilize us for that for sure. Again, we'll help you to research potential areas if it's buying for your family as an end user or buying as an investor. And we'll help you to put together a reasonable timeline for your purchase as well, and let you know what steps you're at and what needs to be done. So we did really well. It's 8 o'clock. We did great. So we wanted to save some time for a Q&A. So we will, if you'd like, you can unmute yourself, ask a question, let us know how it can help. And I'm going to put up this side as well, just with our information so that you can reach out to us. Jenny on Instagram or phone numbers here, email, however you guys would like. Okay, so I see Wendy's hand is, so Wendy, you can unmute and let us know your question.
Okay, thanks for taking my question. I have two questions. So the last property that you showed in Winfield, where exactly is that?
Oh, thank you. Sorry, that's in Brantford. Empire has a lot of different communities, but that particular one is in Brantford.
That's Brantford?
Yes.
Like Brant. Okay. All right. Okay.
My south of Cambridge.
Yes. Okay. Thank you. My second question is in regards to the product that Jenny spoke about. In the second product, where you can qualify for the income.
With the
The
rental.
income can be calculated into the mortgage. Does
Hmm.
that apply to a pre-construction as well? If you were to buy a pre-construction that has an income potential?
Yes. Yep.
Okay, okay.
So, so to expand on what you're thinking, give me a chance here. So say you were getting something relatively with a quick closing. So that's how it would take in effect. If you're getting a pre-construction with a quick closing, then that unit had a rental portion to it. It
Yes,
wouldn't necessarily have to be a legal basement, but depending on your finishes and how you negotiate with the builder, you could have
yes.
just enough of what you need to qualify for that mortgage, which you can get right now, if I'm correct on both sides. For you, Wendy,
Mm-hmm.
and what you answered, Jenny.
Yeah, for sure. And I actually want to add something else. Let's
Hmm.
say you are buying a home, but it does not have a basement, finished basement just yet. I
Hmm.
can qualify you based on potential rental income
Okay.
once you will renovate that basement.
Hmm.
It's a great
Okay.
point.
That's
Thanks,
good.
Jenny. That's cool.
Yeah.
Nice.
Hmm.
Mm-hmm.
Excellent.
Okay.
Yeah,
Okay.
and there are available on the market again, depending on the builder, depending on the area, where sometimes they're marketing it as like a multi-generational home as well.
Hmm.
So, and we help somebody buy in another city, and the builder is like the apartment that they're giving them actually is legal on
Hmm.
top of it. So,
Hmm.
depending on the builder, if you're letting them know if we know them well and stuff like that, we can negotiate some of these things.
Yeah.
So,
Okay.
thank you
And
for
I
your
think
question,
it's
Wendy.
just, yeah, it's actually a great question. And we see that movement happening also in government regulations. They're actually
Yes.
encouraging for
Mhm.
people to create multiple units because there is
Yes.
no enough space, right, in their
Hmm.
own home. Like, if, for example, there was all social media was talking about putting tiny houses
Tiny
in your
houses, yeah.
backyard. So
Tiny
that's
the
another.
garden
Mhm.
sheds,
Mhm.
alleyway, garages, carports on top of your garage, anywhere where you can get an extra unit. So you could do your basement,
Mhm.
that's a duplex, and you put a shed in the back, that's a
Yes.
triplex, and then you
Mhm.
put a garage on top of your garage, that's a fourplex.
And that's it. You cannot go more. And because
Yeah,
that then it becomes a commercial unit.
yeah, yeah, yeah.
And are in certain jurisdictions?
No,
Is
it's everywhere.
It's
everywhere
everywhere.
in Ontario?
Yeah.
Every jurisdiction has a slightly different rule for what qualifies for them, but they're
Okay.
all pretty much the same. It's just like to do a legal basement unit in Brampton is slightly different than Hamilton and slightly different in downtown Toronto and slightly different in Cambridge. But
Mhm.
it's the general basic principle to all of them.
Okay, okay. Do you have any special incentives? Do you see any builders with special incentives in Waterloo area?
Yeah,
Yes.
absolutely. Yeah. Okay.
There are in Waterloo. Waterloo's a very nice area. Was
Mhm.
it you that asked about the rental, best places for rental,
Those Marissa.
Marissa?
Yeah.
Okay, well, I'll answer that kind of now.
Mhm.
Um,
Okay.
it depends on what you're looking for and what's your criteria. So, in general,
Well, what
I
I'm
can't.
looking for, what I'm
Pardon me?
looking for is that my son is going to school there.
Yes,
Oh,
And
okay.
great.
he's in his first year at the University of Waterloo. He lives on campus.
Hmm.
And
Okay.
what's really paining me is that, come
Hmm.
September, he's going to
Hmm.
have to rent off campus.
Hmm. Yes.
And it would have been really ideal if we can,
Hmm.
get something
Yeah.
where, he can live and then it could also be, he can also
Yeah.
rent
Hmm.
the other part of it. And then whenever
Yeah.
he leaves, at least that's his
Hmm.
first income property.
Yeah.
Yes.
Yeah.
Very good.
Yeah. A part of my story of real estate investing is because of Kitchener, having started my real estate career in Kitchener and dealing with so
Okay.
many investors that had student housing. So I'm like, well, I'm doing all these properties for people who have student housing and I'm not investing myself. So that
Yeah.
kind of put that mindset into starting to invest into real estate. And when we're
Mm-hmm.
talking about best places to invest in real estate. Well, for student housing, Kitchener's one of the top ones in all of Ontario.
Okay. Wow.
It's a decent price compared to
Mhm.
Toronto because the prices
Mm-hmm.
are so much cheaper than Toronto. And they have so many different universities and colleges that are continuously building in the area to draw in more
Yeah.
people. And because it's such a large university and rental tech area in
Mm-hmm.
the GTA, you don't necessarily have to have a student that lives where you buy, and it doesn't have to be so close to the student area where you buy. So you
Yes.
can tend to have a
True.
little bit better of a property than a general student housing area. Um, a tip for me personally, I choose Kitchener over Waterloo just because of taxes,
Mm-hmm.
and you don't necessarily have to be a licensed landlord in Kitchener, but you do in Waterloo, and they're side by side. So
Okay.
I
Hmm.
kind of
Okay.
recommend to stay on the Kitchener side just for the licensing aspect and for the cheaper taxes.
Okay. Thanks for that. Okay.
Yeah,
Thank you very much.
yeah, no problem.
You're welcome. Wendy, maybe take down Max's number and you guys can chat a little bit more about
Yeah, for
that,
sure.
and
Oh,
we can
yes,
show
for sure.
you some
Hmm.
properties. Yeah.
Yes, for sure. Thank you.
You're welcome. You're welcome. Anything else for Marissa with the top rental markets or?
Again, it's what you're looking for. What type of tenant are you looking for? What area are you looking for? If you're just off the top of my head, I can't tell you which one has the best specific vacancy rate per dollar amount, but anywhere outside of the GTA, buying in wise is going to be cheaper. So if you offset that with how much you're going to get in rent, there's that. But depending on where you want to have that property, you're going to live in there as well. Are you not going to live in there? Do you want a certain type of tech person? Do you want somebody that works at the airport? Do you want something closer that you own closer to your home? It could be, many different type of things or areas.
Yeah.
So everybody's, criteria is different. So everybody's, journey is different. If you want to ask me specifically or Stephanie, it could be something new construction, resale. We can figure out, what best suits you.
And some I love what you talked about Kitchener,
Mhm.
price wise. When you're looking at rental markets, it's like how much is the cost? We know that slide where I was talking about cash flow and
Mhm.
the rental income. So where can you buy in that the price point is not so high
Mhm.
that it's really difficult for you to get into that cash flow and equity building
Mhm.
scenario, but also an area that has the growth potential and has employers and whatnot. An area I really like that we've invested in was Etobicoke is another one because there's so much growth and development planned out over the next few years. And then it is servicing, I can't remember what they call the area, but the area of where the airport is, and there's I'm gonna want to throw out a number. I haven't looked at it in a little while. 60,000, whatever. It's a really high number
Yeah.
of employees in that potential area of folks who might want to live there. And then there's transit wise, it's easy for them to get to downtown or get to the airport or get
There's
to
transit, there's
wherever they need to
parking,
be.
and between Etobicoke and Hamilton, because of all the construction and the via and the GO that they're building, that's the next biggest rush in terms of the condo city where it just travels down that way.
Mm-hmm. And then you're able to get a comparable unit to something like in Toronto, but not at the price of Toronto. So that was another great place. I like Hamilton so much,
Mhm.
just for just the development that they're doing in the city, the affordability, and then like I like the healthcare industry and universities and stuff that are in the area. So it's not necessarily that you have to rent to a student, but maybe you're renting to one of the professors or one of the folks in the pharmaceutical industry or something. So there's like a nice option for a lot of professionals and then or families. And just like Max said, it depends a lot on what your goals are and what type of
They're
rental
putting
that
some of
you're
the
looking for.
most amount of money in the area to revitalize the
Yeah,
downtown core, the
waterfront.
waterfront, the industrial, all of that. The restaurants are already nice. They have the most amount of waterfalls and trails and stuff in the waterfalls in the world, and the trails and the scenery is beautiful.
Yeah. If you like the
Yeah.
East End, Pickering has had some nice developments and growth as well, from condos to townhomes and stuff like that. Obviously it's a little bit more expensive the more you go that way, but I think there's some great options there as well. So.
Yeah. You also have Brantford with all the schools as well, and not too far from the winery and wine country and the home of Wayne Gretzky. And they're super affordable compared to Kitchener, right? So you have Kitchener that's cheaper than Toronto, and you have Brantford that's cheaper than Kitchener and Cambridge.
Yeah. Thanks for your question, Marissa. I hope we
Yeah.
answered that okay. Do you have anything you want to add to your question, or was that okay for you? All right. And thank you, KN. I'm glad you found it informative and helpful. We
Yes.
appreciate you being here.
Yes.
Any other questions for us from anybody? Again. Anything? Oh, something else there. Thank you, Wendy.
Yes.
Thank you so much.
You're welcome.
Anything else that you'd like to add or say, Jenny, before we move towards wrapping up today?
Nope, I just wanted to say that it's absolutely a cost nothing for a client to work with a mortgage agent. Please reach out. Let's pre-qualify you that you will be doing the fun stuff, which is basically shopping.
Yeah.
Yeah. Yeah. Sure. Yeah. And thank you so much again. You're a wealth of knowledge as always, and some new information for us. We learn as well every time we get on. We didn't know certain specifics of the pre-construction part. So I'm familiar with the products that you were talking about, but now I can put that in my tool belt, that the pre-construction counts as well.
Max, it's because it changes all the time.
Yeah, for
That's
sure.
why it's important to work with experienced and knowledgeable realtors, mortgage
Yeah.
agents, because the changes, it's such a dynamic world.
Absolutely. Absolutely.
Sorry, guys.
Marissa, thanks. Yeah, thank you so much. Marissa, thanks for your comment. And if you want to chat, same sort of thing. There is a lot to consider. There always is. There's so many opportunities, but it's about understanding what you're looking for to help to see which opportunities are the right ones and then which ones are, not in line with where you're trying to go. So, definitely here to support.
I have a quick question. I don't know how to put your hand signal or
That's
whatever.
okay. Go ahead. Don't worry. That's okay.
Is it true that the loan to value you can get it higher than 80% now?
Well, you could always get it higher than 80%. So it really just depends on purchase price, how much the house worth. So if before you could put less than 20% on $1 million home, now it went to 1.5. So it was always true. It's just the purchase price went from 1 million to 1.5.
Yeah, I was always told that that the loan to value had to be 80% or lower when you're purchasing a home to qualify.
No. That's not true. You can put as little as 5% down payment. It depends on basically purchase price. And you don't need to be first-time home buyer for it.
Okay, so with the 30-year amortization, is that just for first-time home buyers or could be for anybody?
Okay, so there is two things here. The 30 years amortization, if you put more than 20% down payment, basically loan to value 80%, you're automatically getting 20%. Oh my God, sorry, it's been a long day. You're automatically getting 30 years amortization. Now, if we are talking about properties under $1.5 million and you want to put less than 20% down payment, the 30 years amortization is only for first-time home buyers.
Thank you. That was really knowledgeable.
Yeah, so definitely you don't always need to put 20% down payment.
Hey everyone, thank you again for joining us for our first webinar of the year. It was a pleasure to have you all with us. Great engagement, great questions. Hey, and if any of you have any ideas or questions that you want to dive deep into for our next webinar, definitely reach out. We're happy to hear from you. If there is anyone who's interested in connecting with anybody here from our panel today, again, we look forward to hearing from you and helping you guys on your journey. So we will see you at our next webinar.